All right, so you might be looking around for different stocks to pick. Let's look at some of these percentage yields. The dividend yield percentage, if you look up here, highlighted. Every platform is a little bit different. Some don't give these kind of numbers to you, so you got to kind of either research them out. Try to point most people over to closed-end funds. I think it's maybe .org. I can't remember. .com, .org, whatever. You can find it fairly easily. You can see that we we do have quite a few excuse me, CEFs in these portfolios. One thing to remember, try to stress this, we know the rule of 72, just to take whatever this percentage is, divide it into the number 72, and this will give you an approximation. It's not exact science. It'll give you an approximation of how long it'll take you to double your money. All right, so keep that in mind. So if that's all we'll take this one for example, DX. We look here, we see that got 35 shares at $592 invested, right? If it does nothing, okay, from this day forward and just stayed flat, but continued to pay you $1.56 per share per year at 9.6%, just take 72 and divide it, take you 7.5 years to double your money. It's that simple. No matter what happens to the price here, right? Of course, if it gets delisted or whatever, you lose your $592. But this is basically, if it's paying you monthly, you can always look over here. So you're getting your money monthly. You can work it out how much you're making. It's going to be a percentage. 35. Let's just get the calculator out again. This is how much you'll make per year, right? 35 multiplied by $1.56. This is if it stays stable, right? So you make $54.60. So take that number, right? And the 592 divided by 54.60, 10.8, right? So you get the idea. The percentage yield per year is what you're looking for, right? You can see all of these. Here's one for 15.2. We take that. Newt. I don't even know what that thing is. That is, let me do it this way first. 72 divided by 15.2. So it'll take you 4.7 years to double your money. So instead of having 136, you'd have what? 272. So New Tech Business Services. I have no idea who they are. Not interested in knowing what they do. I do know that they pay dividends. And here's something interesting. Let's look at this. This is where you can see a decline, okay, in the trailing 12 months. So this came down from $3.35 per year per share down to $3 per year per share, or per share per year. Get that in the right order. You can see this is the only one that we had. It was going ex-dividend tomorrow. Some platforms give you this type of information. Others, you'll have to set your platforms up a little differently. You look at E-Trade. It's a little bit confusing somehow how to get your. It's hard to get them to set up all exactly the same because you have different software engineers that design their products. But this particular platform, the classic TWS through Interactive Broker, has been around for, well, as long as I've been on their platform, which is close to 26 years. 26 years, yeah. So it hasn't changed much. Now there's a couple things that have changed, just minor things, but it's always had the same look. So then they kind of moved up to what's called Mosaic. Now, of course, this is on their IBKR Pro. I haven't even looked at their IBKR Lite. Just not interested in it. If you are starting out and you don't want to pay commissions, all right, that's $1 per side, $1 on the buy side, $1 on the sell side. If you want to get free trades with Interactive Brokers, you have to use their IBKR Lite, but you will not have anywhere near this functionality. There's so many different things that you can do on here. I could do videos all day long on all the functionality, and it can get pretty overwhelming. And they do, you know, they trade everything. So it's your go-to if you're interested in making a career out of this. But here, I'm only showing you how to make money on stocks and investing. I'm not showing people how to trade futures or options or anything like that. That's something you can learn from somebody else. I do not want to teach people how to gamble. That's just my opinion. I may gamble here and there, but I don't do it on these accounts. And basically what I'm doing in the last half hour, all I'm doing is filtering through and keep the feel to what's actually going on, what stocks are actually moving. I'm not looking at them to place an order. That's all done based on predetermined levels and strategies. If you're trying to look at a chart, we'll just use this one with the TLT, iShares 20-year Treasury bonds. If you're trying to decide based on this system that, well, this chart looks good, it looks like it's going to go up from here. Well, that's just guesswork, and we don't guess. Okay, if we want to make a buy, if it comes up on our scan, we decide to buy, or it comes to a certain price level, it all has to do with our scan. So you can tell here, based on this particular thing, we're looking for our next entry at 99.51 based on a pullback strategy. So we're not guessing. You say, well, you're gonna have to wait a long time. So it could happen tomorrow. It may never happen. It could go back up, and we could close this position up, or it comes up on the scan, or some other metric happens. Okay, there's a lot that goes into the strategy, so it's not just buy it, hold it, and hope for the best. We don't think that way. But we were down as much as on the daily profit loss. It was well over 1,200 at one point on this particular account. So it came back fairly strong. Let's go over on some of these others. There's dual accounts here. This one's only down 290. But it looks like we had 3 buys. We had IDC. That was a DCA there. TEL and Calu. Nothing special. If you work for a living, I would advise you not to be looking at this stuff during the day. You're not going to see any fantastic moves. Usually this stuff comes around earnings, and if you're in mostly the quarterly paying stocks, like you won't see huge jumps in CEFs. If you look on your scans, you'll find that um, the volatility, which we call vega on our scans, is quite low. It's under 1. The higher the vega, the more movement that you'll actually see in the security. So let's just go over here, and remember that's on the daily. You're looking at your mosaic, okay? That's just daily profit. What we're looking for is overall profit. Then we go over to our classic TWS and we just set it up numerically and say, okay, well, what's getting close to closing? So here we have 3. Their probabilities are higher than these ones that are lower. It's real simple. You don't sit there and say, well, I think this one down here is going to go up, so I'm going to buy more of it. You got to keep that type of thinking out. It has to be very methodical. You stick to the rules. Don't change your rules. Just say, hey, this is what I'm going to do. Once you get that down, then you buy, hold, and wait to sell. So nothing really going on. It's just a kind of a flat day. This is where you just don't worry about it, but you know that each day that passes, you get paid. So this is where keeping track, okay, we know that we got paid $145.62 this morning, right? So that was spread out between the 3 accounts. I couldn't tell you. You have to break it down. I'm not going to go into all of that, but that's just how it works. All right, we have no profit today, and we can see back on the 1st we had 71.18 in profit, and the dividends were 273.61. So you can see that we're already what, a quarter of the way to our 1,400 for the month. That doesn't mean we're going to hit it, but you have to have a goal each month to hit. It has to be realistic. So like if you're trying to hit, I don't know, 50% per month, it's never going to happen. Okay, you're dreaming. If you really think that these people are out there making, $2,000-3,000 a month, and they're on, YouTube showing people how to make money, they're lying to you. It's just not happening. What are we looking at here? WD, Walker and Dunlap. This seems to be a fairly good mover for us. I was going to do it at the end of last year, and I got caught up in a bunch of other things. But I was going to put together some of the, with this system, the particular stocks that work best with this system. But that's because I'm not tilted that way of thinking. Never expect something to repeat itself. That's the one thing I've learned over the last 30 years in trading and investing, is if you stick with a plan that has nothing to do with repetitiveness, except for your rules. If you're looking for something to, like, here's a good example. People love to do this. Say, well, if I see this red-green bar here, I'm going to put in a buy, right? And boom, down it goes. It's a 50-50 bet. Doesn't matter. And you say, well, let's look for another one. Well, there's red-green. Okay, I'm going to put a buy in there. Oop, down it goes, right? But in an uptrending market, it works fine, right? So what have you got? You have a 50-50 chance of being right, no matter what. So however you want to get into the market, that's totally up to you. You can, figure it out, or you can learn the system, figure it out for yourself, or you can come up with, one of these trend lines. Say, well, if it crosses that trend line, I'm going to jump in there and go. But you have to stick the piece of wood in the ground and say, this is how I'm going to do it. This is how I'm going to structure my investing career. This is how I'm going to not lose money in the market. Because what ends up happening, if you'll look at the majority of these trades, and everybody's like, oh, the naysayers want to say, well, you're only buying, one share, you 2 shares, and you got 4 shares here. And it's like, well, I mean, you're not really looking at the whole story, because what we have is what's called max shares. So when you're looking at your scan, when you see that max shares, that's the most that you can buy that one. Now that can change based on the dynamics in each particular security. We don't look at the entire market as a whole. We look at each individual stock, because what's happening in Apple has nothing to do with what's going on in Boston Properties, BXP. Right? It has nothing to do with it. If we, oh, just had a buy there. Let me take care of that real quick. So is it yeah, so that's what we call a DCA. All right. So we're going to come in here, just check and see if there's anything else on here. Nope. We're going to go over here, and then you'll notice there is nothing above our average price. So that average price just moved down with that buy. Right. So we just bought 3. You can see right there. So now what we're going to do is come over and adjust. All right. So we know we're targeting the dividend amount. So we see 61.35, right? Up here's our average price. 61.35. Now we're going to add the dividend amount, which is 176. And if you'll notice over here, the trailing 12 months TTM was 170. So it's actually come up 6 cents, right? So we're going to add, where is it, 176. Now, because I'm under 100 shares, I have to adjust for the commission. It's $1, right? So if we get ready to sell it, we have to adjust for that $1. So we're going to add 17 cents. Now I just move it up, make it a round number, 63.30. We're going to close the entire amount, 63.30. And the reason why there was no sell in there, sell limit above to close that order right before, is because this had aged on what's called, oh shit, what do they call them? It's just end of its time for GTC. So they call it aging. I think it's 90 days or maybe 120, I can't remember it. It's different depending on the quarter that you're in. It's kind of weird, but I don't mind it because we know that these are all, fairly low, below their average price. So it's important to remember that. So this is why I'm constantly updating this. So if I see something, let's just say there wasn't a sell order in there and we were green, okay, our unrealized profit was positive, then I'd want to put in an order. Majority of your stocks, dividend-paying stocks, are not going to move like growth stocks. Growth stocks tend to move really quickly because of heavy institutional investing, but it's a double-edged sword. It can go against you as fast as it can go up. A lot of people love that. They love that adrenaline, and that's what gets them into trouble. So we go back over here. So banners all taken care of, and we're not doing anything with this right now. Next thing is just to wait for it to either come back up on the scan, or we reset based on the strategy for that particular portfolio. That gets a little bit more in depth. You'll learn more about that in the courses. But understanding price levels all has to do with money. If you don't understand how to manage your money, you'll always be playing catch up, trying to, make up for your losses. We don't take any losses, so therefore we don't have to worry about that because we have rules in place. We have structure. If you have that structure in place, you won't make those mistakes. Mistakes are losses. There's no other way to put it. So let's see. Looks like we've got a thunderstorm coming in here. So let's go back over here and see. What was that one that I was talking about? SLVO. Let's go down to the bottom here, and this will maybe highlight something. Okay, SLVO. Okay, so you're looking at 20%. Okay, I know that sounds crazy, but you can see that in the last trailing 12 months it was paying 77 cents. And then for this year, this is a monthly payer, it's paying 79 cents per year per share, right? So we have 354, so let's just take a look and see what it's going to pay us on the next date. Would be July 20th, in a couple weeks. So 354 multiplied by 79 cents. So for the full year, you'll get 279.66, right? That's a 20% gift. That's the way I like to say it, gift. Okay. This particular one has been around a long time. I think there's only this one, the HGTUX, that's not paying us a dividend anymore. It used to. It was an oil company based down in Texas, Houston, Texas. So let's look at that. Oop, that's not what I wanted to do there. Just discard that. And let's go back to the calculator. All right, so 72 divided by 20 is 3.6 years to double your money. Now, this particular portfolio, this has been in here for, I want to say, 12 or 13 years. Okay, this is one of the educational platforms, and it hasn't changed much. I mean, it gets a little higher, it gets a little lower, but you can see month to month it just keeps coming in. So if it's 3.6 years, we basically doubled this 45.67 3 times. Okay, so yes, there's an unrealized loss there, but it doesn't mean anything to us because we're never selling it. If it goes away, we lose that 45.67. But what did we gain? We've gained close to $9,000, well, over $9,000 in that 13 years. It's something important to understand. Most people will never understand this because they're saying, man, I'm down all this money. It's like, well, you would be if you weren't taking any dividends in, right? But, and some of these will fall off. We've taken losses, like, well, it's been over 2 years now, but we've taken losses on other ETNs, exchange traded notes. We will never trade those again. This is actually one of the last ETNs. It's just short covered call. I don't know exactly how it works, but I think back when we first bought it, what would we buy it at? $12.90. So it's been $12.90. We're down at $4, and it's just been floating around. Let's take a look. So we look at SLVO. SLVO. So it's just been floating around there, but we also have a trailing order. And so if it just here in the last, what was that, April, it decided to drop. Now it's related to silver, so do I care? No, because we've made the money off of it. Can we lose the 4,500? Sure we can, but what happens if it goes another 3 years, or 3.5 years? Let's just say it goes back up. I mean, you're in the driver's seat when you're collecting dividends, all right? And you see this as a monthly payer. This is what you want. You want this type of money coming in consistently. I'm not telling you to put all your money into SLVO. Don't get the wrong idea. This one has not come up on the scan in many years, okay? We're just playing this out. We're playing this out to see how much money each day that goes by. We take a little bit more out of the market, and a little bit more, and a little bit more, and a little bit more. Look at your money as a tool, It's not supposed to be this thing that you're going to hold on and throw it under your mattress. It does nothing if it's not working for you. As the other side of it is, don't be looking for a stock that is paying you. Well, let me back up here a second. I want to be entirely clear on this. Okay, this is what it's paying right now. If you had, it's paying 20%. But let's back this up, all right, and take that 79 cents, 0.7902, and divide it from what we originally paid for it, right? Okay, so it was 6%. 6%, well, it's hard to say. I'd have to go back and look at the actual dividend amount. I think it was quite a bit higher back then. But let's just say it was 6. Let's cut the difference and say it was 10. So it took us 7 years to double our money. So accurately, we're still ahead. This is my point. Don't get confused by saying, okay, hey, you know, I'm making 20% on this, when you're actually, you have to know what your original price for it was. And so there's 2 ways to do that. But we're still up. We still have a market value of 1,400, so we still have some money in it. But right now we're still making that 6% or 7. We're still making 7%. What was that? Yeah, 6%. So we're making 6%. So that'd take us 12 years to double it again, right? If you look at it that way, because the dividend amounts do change, and that's one thing that you want to keep in your head as well. So yeah, don't think that you're making 20%. Now, if you were just to buy it today and buy 350 shares, yeah, you're making 20% on your money, because that's what you'd only have. Let's see what that would work out to. Well, it'd be 45.67, but you wouldn't have a negative unrealized part of it. It'd be 45.67, but you wouldn't be down this amount because you would have bought it at 395. I hope that makes sense. And try to be as transparent with this as possible, because a lot of people get confused when it comes to numbers. Now, I don't know what to do. I guess I have an engineering degree, and I like to I've always worked with numbers, been in the automotive industry, working with stocks, working with interest rates, working with money, just all the way around. I mean, if you're not familiar with it, you need to just put both feet in, dive in, and try to understand what's actually going on here. Because if you're in a hurry to make money, you're going to be in a hurry to lose money. And there's lots of get rich quick schemes out there, but this isn't one of them. And the market is set up for a lot of people. All you got to do is look around on YouTube and everything else with the amount of people that are pushing products. Okay, they're pushing systems. They're and yeah, maybe I'm pushing a system, but what I'm pushing more of is a education and an idea on how to make this work for you, where you don't make the same mistakes. Basically, what I've done is I've taken all the mistakes out so you don't have to make them. But like I say, there's a very small percentage of people that will understand this and take it going forward. Because they don't see the $1 million account, and I'm not going to put one up there and have people. There's enough. I get enough attacks on my website to try to get to the information, but they don't seem to understand. These accounts will be reset if this hits the $71,000 account. Once it hits 100, we'll move it back down to 70, or we'll take it back down to 50 or whatever, because we know that we can double that 50 in 6 years at 12%. So we know that we're 2.5 years in, right? So the same thing goes for these other accounts. We're just trying to show people how you can do this, and the people that understand the system and have taken it to heart have done really well. So, but doesn't look like much is going to happen. It looks like we're probably going to end up being fairly even. Let's see what the oil's down big, which is really surprising. But That's why I say, that's my other saying is, if you follow the news, you're going to lose, because you're going to make decisions off of what you think some expert is telling you. I put something up there about the, what do you call them, analysts. I don't follow any analyst. I get analyst reports all the time from Interactive Brokers. I don't pay any attention to them. All it is just some email. Just trash it. Um, the reason being is I have a strategy. I stick with it. It's successful. Everybody that's a team member understands this. They're doing the exact same thing. So we have basically, we took all my accounts and all the other accounts. We have about 50 accounts that haven't lost money in over, well, 756 days, over 2 years. So, but yeah, and it's hard for me to talk, make up content, because this is so simple to me. And most people are too afraid to ask questions because they feel like they're inadequate or stupid or, just ignorant. And that's the worst thing that you can do, is if you don't ask questions, you're never going to know. You may have an idea of what's going on, but if you take the wrong course, you're going to be like, man, this really sucks. Because there's a lot of people right now that have, really gotten hurt in this market, and we're not one of them. And that's what you want to be. You want to be the one that's, taking money out of the market. It looks like we're closed. Hopefully that helps a little bit. You're wondering why I don't talk a lot on them, is because there's not a heck of a lot going on. But I wanted to, show people the dividend yield and what it actually means, and how long it actually takes to, do some of the stuff. And if a market is roaring back up, you'll start seeing numbers in the two. I've seen a month at 4% return. So that just cuts your timeline down even faster. But on average, if you can get 12% per year, it just takes you 6 years. I've got another video out there on what that means. Just check it out. Don't have to keep rehashing it. But that's all there is to it, guys. Talk to you later.